Amazon just dropped some record-breaking numbers, a true bombshell. So why on earth did their stock have its worst crash in almost 20 years? That's the riddle we're solving today. Okay, so here's the mystery, right? Amazon puts up these incredible numbers. You'd think the stock would just shoot for the moon. But instead, total panic on Wall Street. We're talking the company's worst stock performance in like 2 decades. How was that even possible? Well, to get it, you gotta look at the two sides of the story. And here it is, laid out for you. On one side, a company that's just absolutely crushing it. I mean, over $213 billion in revenue in one quarter. That's up 14%. But on the other side, the market just freaked out. An 18% stock drop wiped out $450 billion in value. Poof, gone. So clearly there was something in that earnings report that scared investors half to death. Let's go find it.
All right, so first, let's look at all the good stuff. I mean, on paper, Amazon's business is an absolute monster, a real juggernaut.
You know, we all think of Amazon as that giant store where we buy everything, but the real moneymaker? It's AWS, Amazon Web Services. That's their cloud computing arm. And get this, it might only be about 17% of their total sales, but it brings in roughly half of the company's entire operating income. It's the absolute profit core of the whole empire. And that profit engine, it is firing on all cylinders right now. After slowing down a bit, AWS growth is just surging again. We're talking a massive 24% jump year over year. And the reason is probably the biggest buzzword on the planet right now, artificial intelligence. I mean, every company out there is rushing to build AI, and they need a ton of computing power to do it. And guess who they're turning to? Yep, AWS. And if you need any proof of just how massive that demand is, just look at this number, $244 billion. That is Amazon's AWS order backlog. That's money they already have on the books, future contracted revenue from companies locking in their cloud services for years. This isn't just a guess. It's a giant, flashing neon sign that the AI boom is fueling absolutely insane demand for what Amazon is selling. Okay, so the business is booming. AWS is on fire. What in the world could have caused that historic crash? Well, it all comes down to one single mind-blowing number. $200 billion. That was Amazon's guidance for what they're going to spend on capital expenditures by 2026. This is the number. This is what sent a shockwave through the entire market. But what does that even mean? So capital expenditure, or CapEx for short, is basically just an investment in the future. The best way to think about it is like this. Imagine you're renovating your kitchen. You spend a ton of money right now, which, yeah, hurts your bank account in the short term, but you're doing it because you believe it's going to make your house way more valuable later on. Well, Amazon is planning the world's biggest, most expensive kitchen renovation ever. And this level of spending puts Amazon right at the front of what everyone is calling the AI arms race. See, the world's biggest cloud companies, the hyperscalers, they need a staggering number of data centers to power all this new AI tech. And Amazon? They're betting more than anyone. They're planning to outspend both Google's parent company, Alphabet, and Microsoft to build the infrastructure they think will let them dominate the next decade.
So this brings us right to the heart of the debate. That $200 billion number has basically split Wall Street right down the middle. Is this a genius, visionary move that's going to secure Amazon's future? Or is it a reckless, crazy gamble that could totally sink the company? So here are the two camps. You've got the bulls who think Amazon is playing 4D chess here. They see this massive investment as building an untouchable fortress in the new world of AI. Then you have the bears, and they see a company just lighting a giant pile of cash on fire, threatening the profits that investors expect to see today. Let's break down both sides. Okay, the bull case. They argue this isn't just wild spending. Remember that $244 billion backlog? The demand is already proven. By spending this money now, Amazon is building what they call a competitive moat, so wide that no one else can even get close. They're even designing their own custom AI chips, like Trainium, which is going to lower their costs and boost their profit margins down the line. And maybe the biggest tell? A whopping 92% of Wall Street analysts are telling their clients to buy the stock. But the bears see some serious risks. For starters, what if the return on this huge investment is actually really low? What happens if AI services just become a cheap commodity and those juicy profit margins just evaporate? They're also pointing to the super fierce competition from Microsoft and Google, plus this growing storm of regulatory threats that are trying to break up big tech. And those threats are no joke. This quote here is from the California Attorney General, who's leading a huge antitrust lawsuit against Amazon. He's basically saying that Amazon bullies sellers into keeping their prices high on other websites, which kills competition everywhere else. I mean, if they lose a case like this, it could fundamentally change the way Amazon does business. So let's recap. You've got this massive, controversial, cash-burning bet on the future that is absolutely terrifying short-term investors. If that whole story sounds familiar, well, it should, because for Amazon, we've seen this movie before. Think about it. Back in the early 2000s, people thought Jeff Bezos was nuts for spending billions on warehouses and fulfillment centers instead of just banking the profits. But that move, that built Amazon's e-commerce moat. Then, in 2006, they made another crazy bet on this little side project called AWS, and that became their profit engine. This $200 billion bet on AI, it's just the next chapter in the exact same playbook. When you boil it all down, the takeaway is pretty simple. This is classic Amazon. They are, once again, sacrificing today's profits for a shot at tomorrow's dominance. It's the strategy that has defined them for decades, and this is just the most extreme version of it we've ever seen. They're trading short-term certainty for long-term invincibility. And that leaves us with the ultimate question, doesn't it? Amazon built its empire by making these bets that seemed completely insane at the time, but ended up reshaping our world. Now they've just placed the biggest bet in their entire history. The only question that really matters now is, will it come with the biggest payoff?